estate entrepreneurs. I'm Sean Steckler with realestate-entrepreneur.com, and we are now moving into the third video in our series on the 1031 Tax Deferred Exchange. So let's get started. Real estate investing provides passive income through monthly rents, and we had talked about the different types of income, passive being one of them, and we did that in our first video. We also talked about the leverage of continuity of income that real estate provides, and if you remember, that was where the entrepreneur or real estate investor worked really hard one time and got paid over and over again. And we are going to now talk about more along the lines of how huge the tax advantages are that real estate provides compared to paper assets. Paper assets being stocks, bonds, and mutual funds. The one huge advantage, and the reason for this video, is the 1031 Tax Deferred Exchange. And if you're not familiar with it, I'm going to give you an overview and a few details on how powerful this particular tool can be for your real estate investing business. The 1031 is actually taken from section 1031 of the tax code. And just to give you a brief definition, the 1031 Tax Deferred Exchange allows you to sell income, investment, or business property and replace it with a like-kind property. And just to translate that, that simply means that instead of just selling the asset and paying a capital gain, the IRS allows you to sell the asset, the investment property, and then replace it or roll the gain into a like-kind property. And what you're doing is you're not avoiding paying the taxes that are owed, but you're deferring them. Hence the name Tax Deferred Exchange. We're going to go through an example with our friend Bob, and we're going to give you an idea of what happens when a real estate investor does it the wrong way. So here are the facts. Bob buys an apartment building for $500 grand. 10 years later, Bob sells that apartment building for $1 million. Good for Bob. Bob's gain is $500,000 on the transaction, and I know that his basis in the property would be a lot higher with all of his maintenance, repairs, and if he affected any improvements, but for teaching purposes, I just want to keep the example simple. So for what we're talking about here, Bob's capital gain on the transaction is $500,000. At a 15% capital gain or capital gains rate, Bob would pay $75,000 in taxes when he sells the building. Now let's do it the right way. Bob buys an apartment building for $500,000. 10 years later, Bob sells that building for $1 million. Bob's capital gain is $500,000. Same set of circumstances. Here's the difference. Bob rolls the gain into a 1031 exchange and ends up paying zero in taxes. Big difference in the two scenarios. So what happens to Bob now? With the 1031 exchange, Bob has $500,000 to put down on a larger property with stronger cash flow. Without the 1031, Bob has $425,000 to put down, and all I did was subtracted out the $75,000 that Bob would pay in taxes had he not used the exchange. So this is not a big deal for this one transaction, but, and this is a big but, if Bob buys and sells 10 more times, the difference becomes significant. So instead of looking at $75,000 in savings, you're looking at $750,000 in taxes saved. That's almost $750,000. So, no more taxes? If Bob chooses to do the 1031 for every future real estate transaction, he would in fact defer paying those taxes indefinitely. And I highly recommend that you seek out professional, legal, and real estate counsel in order to do a 1031. The 1031 exchange is a powerful wealth building tool and is exclusive to certain types of real estate. And for what we're talking about here, we're talking about investment property or rental real estate. You cannot do a 1031 exchange for stocks, bonds, mutual funds, or any of the paper assets. Yet again, another huge advantage to investing in real estate. Real estate tax benefits. Passive income taxed at 0%. We went through that in our first video. And the 1031 would allow you to postpone your tax obligation indefinitely. Very good, powerful combination. So the disclaimer, again, I'm not a real estate attorney. I am not a tax attorney. So please consult a qualified professional when looking into doing a 1031 exchange for your real estate business. But I highly recommend it. So as we wrap up this video, I just wanted to thank you for taking the time to watch. It was a pleasure sharing with you. I hope that through the first 3 videos we've really gone into the tax advantages of the investment and how, in my opinion, real estate investing is superior to stocks, bonds, and mutual funds. So for now, this is Sean Steckler with realestate-entrepreneur.com.